I've been following Tesla closely since becoming an investor in 2017, and I've been creating content on Palantir since just before it went public in 2020. For full disclosure, I own both stocks and look to add more to my investments because I still strongly believe in both. In this video, I hope to give you a new perspective that you may not have yet for both of these stocks and companies. I'm not here to change your mind and absolutely not here to influence you into making an investment, but rather to explore the possible futures of these great and innovative American businesses that I believe will be multiples higher in the future, the near future. Today, we will be discussing the medium-term future of these stocks with their respective catalysts and by exploring the opportunity cost of choosing one over the other if there is one. Moreover, I will start with highlighting what you are paying for when buying these two businesses at their current levels, what sort of numbers they will be putting up in the next couple years, and the resulting share price predictions. Special thanks to Masterworks for sponsoring this video. Let's go. Let's begin with the current state of Tesla versus Palantir. Tesla today is the fifth most valuable US company with a market cap of $900 billion, over $50 billion in trailing 12-month revenue, and it has a trailing 12-month revenue multiple of about 16 times, with its staggering 65% year-over-year growth rate. There is simply no other company growing this fast with a market cap this large. Say what you want about Tesla being overvalued by some metric, but considering its rate of growth, that metric will soon become irrelevant over some period of time. For instance, have a look at Tesla's historical price-to-earnings ratio. I remember it being about 2,000 times earnings, and a while back, it was non-existent, like Palantir's is today. However, even a couple hundred times this year's earnings for, let's call it fiscal year 0, and we assume that the stock stays stagnant. Look at fiscal year 2, for example, and the price-to-earnings ratio today becomes a laughable 50 times by my estimates, making it valued too lowly for its continued rate of growth, which is expected to well surpass 50% each year for the next few years and beyond. That said, you're paying a premium for it. I don't believe Tesla is priced for perfection, at least what my sense of perfection is, but I do think execution is certainly required, as with any high-growth stock, with earnings forecast off of that growth. Tesla today stands as a tech behemoth, getting credit for its past execution and probable future success. More on that in a moment. Palantir today trades at a $25 billion market cap, with its $1.5 billion in trailing 12-month revenue, and also around a 16 times trailing 12-month revenue multiple, and approximately a 35% compound annual growth rate. Palantir is currently unprofitable on a GAAP basis as a result of its stock-based compensation, above the current industry average. It is free cash flow positive, but is still a few years out from true profitability. Just if you were interested in the comparison, it's worth noting that Tesla spent $2+ billion on stock-based compensation last year, and Palantir spent over $1 billion. But that is a non-cash expense, such that stock-based compensation increases the share count, thus causes dilution, but cannot bankrupt a business. From that perspective, Palantir has a couple $1 billion in cash and no outstanding debt. This is not the type of capital structure you'd expect until you realize that Palantir is working to maintain the vitality of some of the most important institutions in the world. Now let's just circle back to the idea of profitability. Go back a few years and Tesla was unprofitable because they were working on ramping the profitability of their cars, building out their factories, expanding Fremont, building Shanghai. They were unprofitable a few years back. Now everyone knows what has happened to the stock since that point, and of course to their revenue and their production since then. But that's why I want to make it clear what this comparison is. It's a comparison of Tesla that is much more mature in the sense that it is profitable, generating large amounts of cash, whereas Palantir is still generating cash, but on a GAAP basis being unprofitable. So Palantir, if you will, is a little further behind Tesla in the story. Of course, they're not going to follow the same paths and trajectories. For the sake of this comparison, that is what I wanted to bring up. And Palantir today stands as a software business of the highest quality, with an order book that's ever extending, and is being backed by the strongest institutions in the world, or should I say in the West. And it's attracting and retaining top talent, just like Tesla, in the league of the best, while once again, still needing to prove its profitability, but that is just a matter of time. Let's dive in a little further, but first I'd like to recognize today's sponsor, and that is Masterworks, which is a billion-dollar company that is building the first platform where you can buy shares of real physical art from legendary artists like Banksy, Monet, Basquiat, and others. Masterworks specializes in contemporary art, and I was shocked to learn that these prices have outpaced the S&P 500 total return by 164% from 1995 to 2021. Masterworks specifically returned over 30% to their investors in both 2020 and 2021. In the US, Masterworks offers a secondary market where you can sell your shares, similar to how you would sell a stock on your favorite brokerage application. With the turbulence of the stock market and macroeconomic factors, top equity firms are projecting real returns of only 5%, and diversifying into alternative asset classes can help to reduce your risk from stocks. You can gain priority access to the entire Masterworks platform by clicking my link in the description. So go check it out and let me know what you think. Thank you. Now on to the catalysts for both Tesla and Palantir. Tesla's first catalyst is its vehicle production for 2022. I believe Tesla will achieve volume production growth in excess of 75% in 2022. From 2021 figures of 936,000 cars, that is an estimate of 1.64 million. Q4 capacity annualized is on the order of 1.2 million vehicles, and with installed capacity increasing in both existing factories, and as Berlin and Texas come online in this first half of 2022 and ramp in the latter half of the year, Tesla will deliver 2 years of sequential growth over 50% for the first time in its history, a staggering possibility considering, of course, as I've mentioned, the existing base of vehicle production. And this is only possible due to its aggressive investments in new factories. The second catalyst for Tesla is its pricing power despite macroeconomic instability. A major takeaway from Tesla's Q4 2021 earnings release was its plan to prioritize volume growth over the introduction of new models. This shocked some analysts that couldn't really use their brains too well, and this decision will have a large positive effect, actually, on the continued production this year for the reason that it simplifies production and the supply chain, which will still be a struggle in 2022, and leverages economies of scale. Tesla's operations leverage has become clear over the last couple years while achieving industry-leading GAAP operating margins. This is why you can't really compare them to an automotive company. Additionally, Tesla is supply constrained and does not need to undergo the arduously slow process of ramping production of new vehicle platforms because it already has its existing ones. And competition with new vehicles getting introduced from other companies does not threaten Tesla with its currently overwhelming market share. The market itself is increasing. It's shifting from ICE cars to EVs. And so while you may choose to focus on Tesla losing share of the EV market share, it's not losing share, it's growing share of the market share as a whole. Tesla's products have the highest customer satisfaction scores, and it has no choice but to raise prices because of the demand it is receiving and its wait times. Hence, increasing prices only drops that additional revenue to the bottom line, increasing margins further as we will see this year in 2022. Now, the third and final catalyst I have here for this video is the two major technological breakthroughs I've identified here, which are the 4680 battery production at scale, those batteries, and FSD beta, which will be going to wide release later this year to eligible customers. Now, why are those both important? Well, the 4680 battery cells are getting implemented into its two newest factories in Berlin and Austin, and the new tabless cylindrical cell that they're working on, that format, is going to produce 6 times the power and 5 times the energy capacity while significantly reducing the cost of the product at the same time. And these batteries will be key to the range improvements of the vehicle along with the operating efficiencies, and by bringing the cells manufacturing in-house, they're going to be able to support even faster growth to hit that 50% annual production for around this decade or so. Another critical development is that of FSD beta, short for full self-driving, which is not here yet, but I have actually been in version 10.3 up through version 10.11. Now I just wrote in that. It's not my car, but I've ridden in it. It's not perfect. It's actually really impressive. It does make lots of mistakes. It's got phantom braking and all of that. I can see it's improving. I can see it's improving faster and faster. It's not going to be here this year, but they can work on version 11, which will be the single stack architecture. That'll be a turning point, I believe, for the implementation of this software in the real world usage of it, and they'll be able to recognize the additional revenue of that, which will be when it starts to go out to wide release, hopefully maybe after version 11, and that deferred revenue they've had to previously hold on the balance sheet will be able to come in and, of course, boost the profitability of the company because that revenue is very high margin and nearly pure profit. And now for the Palantir catalysts. Palantir has had a bunch of tailwinds most recently with Russia's invasion, or rather Putin's invasion of Ukraine, and it really proves the essence of what Palantir is doing, which is drawing a line in the sand and taking the stance of supporting the West and its allies, and more importantly, talking about the instability of what the future holds for this world and having that view of geopolitical instability and uncertainty, but also on the commercial side. But getting it back on track for this on the government tailwinds is how Palantir's Gotham government product is exactly what the world needs right now, more specifically what governments need right now and other liberal democracies, in addition to the United States government. So we heard Shyam Sankar, Palantir's COO, talking about how these recent global events have actually put Palantir on alert. They're seeing a lot of opportunity most recently for how they can further this product to defend the West and its allies and expand it, because NATO has always known of Palantir, but now it's really becoming a critical piece of the infrastructure and needs to be further utilized. Palantir identifies their government total addressable market as $63 billion. $26 billion of those dollars coming from the United States government and the other 37 being the international government sector. Right now, Palantir at $1.5 billion today, half of that is about from the government. So we see actually if they're able to hit this total addressable market, again, total addressable market meaning the maximum that they foresee in the future, they've only captured a percentage point of what they say is out there for them in terms of the entire market's acceptance of their product. Of course, this is just a guess. No one can get it exactly right. In fact, Tesla didn't even write a total addressable market and outline it for investors in their S1, because we know that would be far outdated by now. It's more important on what you're doing, how fast you're able to grow, and how far you're able to extend, not just what you initially claim you'll be able to do. For instance, I think Palantir's TAM is actually much larger than what they initially stated in their S1 because of partnerships and platforms they're working on building that they weren't working on building back in 2020. So with Palantir at only about 1% of their government TAM, I think this current unfortunate global situation is going to further propel them towards that figure and increase growth, if you will. Now, on the other side of that, we have a second catalyst of commercial business growth with new clients such as ExxonMobil. And we heard very recently that ExxonMobil is actually now a client of Palantir. Now, it's funny that this is getting brought in a Tesla video and a Palantir comparison between the two companies, given that Exxon is what they are and Tesla is the new paradigm, if you will. But it's really interesting because Exxon being one huge company, and this is exactly what Palantir needs, and it's quite possible ExxonMobil is turning to Palantir to develop even better strategies for going forward and navigating the uncertainty that Palantir does so well with their software for these enterprises. So that is just proof of what Palantir has been setting out to do, which is to prove their use. They have hundreds and hundreds of great partners, very great progress, and I expect much more to come from Palantir on news just like this about huge partnerships and big clients picking up more and more contracts to drive that in terms of revenue. And my last catalyst here is not necessarily for the year 2022 or even a little bit beyond that, but it's the fact that Palantir is now guiding for profitability and even more so the normalization of stock-based compensation in the next few years by the year 2025 approximately. Now, once Palantir is able to continue to grow, but also normalize the stock-based compensation more so to SBC aligned with the industry average, they'll get closer and closer to profitability. And what happens when they get closer to that? Investors can see it more and more, and the more that Palantir is able to get towards that in the future, the stock price will appreciate in advance of that as it becomes more evident that it is a possibility. Some people think Palantir will never be able to reduce their SBC and get closer to profitability. The only way to deny that is actually to build the future and to actually prove it with those financials. And lastly, for the predictions of Palantir versus Tesla. Again, consider me biased since I own both stocks, but I do think both will do extraordinarily well this year. We've had significant drawdowns in Q1 of this year, but PLTR is well off of its January 2021 all-time high, down over 70%, or just about, when I'm recording this, and with TSLA down about 25% or so from its November 2021 all-time high. So let's start it off with the Tesla stock price prediction. I think Tesla could comfortably double from its low of $700 this year, which I think happened on February 23rd. And with its same price to sales ratio and revenue north of $75 billion this year, we are certainly looking at an all-time high from Tesla, and it could be north of or around $1,400 and definitely north above that. It depends on the macroeconomic conditions that we get towards the end of the year. I do not expect Tesla's price to sales ratio to compress. Worst case, I could see it dropping to around 10 price to sales, so 10 times sales to get to the market cap valuation, but I'm not expecting anything lower than that, considering this company is only accelerating its growth rate. And now for the Palantir price prediction. So my prediction for Palantir is a reclaiming of the key level of $20. This is a very far stretch for the stock, just as my Tesla target is for Tesla, but Palantir was actually trading below $10 once at the bottom of the market, let's hope. And analysts and management are guiding for $2 billion in revenue this year, so I think a return to a more favorable multiple is possible this year after getting compressed most recently. So just in conclusion, I think it's very, very interesting that Palantir and Tesla have very similar multiples, if not the same, at around 16 to 17 times their sales. Now, what does this mean? Well, it ultimately doesn't mean that much. Tesla is generating much more revenue and potentially growing at a faster rate, while Palantir is generating less revenue as a smaller company, but it is beginning its S-curve growth. And as you'll see, as now they've gone public, they're developing a sales team. They've got these new products that they're able to build from the use of their stock-based compensation that they've been funneling in these last couple years to get more and more talent to build the future, as they say. I'm expecting Palantir's growth to accelerate just as Tesla's has. So I think while Palantir's growth rate may seem a little on the lower end compared to Tesla's, you're really choosing between a company, Tesla, that is pretty well known. Yes, there are people that still bet against it for some reason. There are people that don't understand it. But largely, when we're talking about the automotive electric vehicle business, that is largely understood. Now, I'm removing the autonomous from the equation and the bots and all of that because we're talking about the medium term here, the near term. I just gave you my predictions for 2022. Bots and autonomous are coming down the road, but not anytime soon. So when you're looking at the opportunity cost between these two companies, you really have to ask yourself the question of, if I'm paying the same price for the price to sales, what am I getting in return for that? For me, I love both of these businesses. I'm buying more of each of them. I plan to continue to buy more of each of them because they're different growth stories. And personally, the reason I even started adding Palantir to my portfolio is that I believe it complements Tesla stock very well in the sense that it has huge ambition and it's just starting to capture it. So if you want me to continue to dive into this comparison in a way that I feel only I can, as someone that has followed Palantir since the beginning of its direct listing and Tesla many years back, drop a like, and at 1,000 likes, I will go into the long-term comparison, which I feel would be a very interesting discussion. And I feel these companies may actually end up becoming competitors at one point if Tesla solves for closer to general intelligence and Palantir is working on the symbiosis of humans with the machines and the intelligence as well. It's exactly what Elon Musk is working on with Neuralink. That's what Palantir is doing with their enterprise software and augmenting governments and all of that. So if this explanation has been helpful in your understanding of these two companies, please do leave a like. Until next time.